Good day. This is the Elliott Wave weekly update for the NASDAQ 100 being recorded on Saturday, August the 3rd, 2024. It was a continuation of the correction and was officially marked as in progress within the NASDAQ. And let me just see who exactly that was. So stocks dropped. Uh, but they're just saying that now the NASDAQ is officially in a correction after that jobs report on Friday. Now, regardless of what they particularly want to announce or not announce, I have been counting that the current move is a minor fourth wave. So let's take a quick review. There are no changes, but I make a quick review in case there's new people that are just kind of logging in and following my work. So again, where we are in the big picture. So we're starting from a weekly, but I could take it out to the monthly. It still would be that big picture. We remain in the process of tracing out a primary fifth wave. Primary wave 4 completed in October of 2022. That remains a low, which I believe will not even be within a near-term picture. I don't think that low will come into the picture until we are completely done, of course, with primary wave 5. So in primary wave 5 will consist of 5 waves of intermediate degree, of which we only have 1 and 2 complete. So we remain within an intermediate third wave. What's inside that intermediate third wave? Going up. 5 waves of minor degree, of which we have 1 and 2, and we just completed minor wave 3 at that recent high back in July at 20,691, I'll call it. And from that level, we are putting in a minor fourth wave correction, which will consist of a minute degree A, B, C. So now we can drop out of our weekly, come right down to the daily, and take a look at the inside. Where are we within that? There you can see the completion point for minor wave 3. And what I've also put in, and that's my infamous now orange box, that box is where minor wave 4 should find its end point. Now, accordingly, Elliott has always taught us and leaves with us that a fourth wave will find its terminus towards the terminus or the end point of the fourth wave of one lesser degree. We're dropping in a minor 4. Fourth wave of one lesser degree will be the minute, and there it is in all its glory. Now, what we've managed to do is we have dropped. We have dropped and closed inside the box, which we've been looking for all along. Now, let's take a peek as to where are we inside of this move to bring it down even further. That likely will get us down to these levels down here. So in the NDX, the actual terminus for that minute wave 4 was 16,974. So on a cash basis, well, you could actually pinpoint that and suggest that's where the market would come. We have some support in between all of that. So for example, what these lines are now representing here, the orange are of course for the minor fourth wave. We've now broken past the 0.236, which was totally always anticipated and expected. Now, next up, we'd have 0.382, which, by the way, is the most common retracement level for a fourth wave. So that comes in at 17,254, 255 basis the cash market. But if it's going to go full bore and come in towards the terminus of that, then we're looking at a drop down towards 17,000 or just below at 16,950, 974. Now, it could complete in any of these levels. So now, also within the daily, I have now put in the Fibonacci levels for the C wave. Now, the most common here would be that C is equal to A. That comes in at 17,569 or 17,570. That's right inside that box and would fit if that's where the market decided to end. But we have additional levels below, two actually. The actual low of minute wave 4, and then the 0.382 or the 38% retracement of 4 minor 4, which comes at 17,254.55. So we have these levels. Now let's drop it again, and we're going to go down to the 1-hour chart so I can look inside the beginning stages of this C wave. Now, what did the market do? I think the market did come down 1, 2, and then we gapped lower again. So we got a lot of gaps. We got a gap up, but now we got a gap down. We had a gap down. We got a gap up. Now we got another gap down. So the market tends to kind of do that. And as it's doing it, it's plowing through a lot of levels that push forward adjusting. Now, this happened on a Friday expiration. And just to speak of expirations, our next larger one is going to be August the 16th, which is the August expiration. I'm kind of looking at that to possibly be that point where we might finish up this fourth wave. We have seen stronger lows be put into place on these larger expiration cycles. August, we'll keep monitoring it because there has been a lot of changes in terms of, evening out calls versus puts. Excuse me. And so I can't say with definity or just saying absolute, but I think that the market will maybe find its low for this minor 4 in August. Now, what if it goes further and it's still going down and we get up to that August and it doesn't just stop and start to rally, but continues to go down, then likely what is being pushed out, and we'll verify it via the count, right? At this point, it could possibly do just that. If not, then it'll likely be September. And I've discussed this all along, is what can we look forward to in terms of where this might finish and then start our next rally. So I'm thinking that the September to December would put us in that, I believe, that minor 5th wave, which I'm looking for. Once minor 4 is is finished, we're into a minor 5th wave up. And again, I'm suggesting that I'm going to be looking for a V bottom. And what I mean by that is like we get a V bottom. It forms like a V because it's like it comes down and just shoots back up and you get a big V. And that's kind of what I'd be looking for, similar to what we saw in October of 2022. Not necessarily that big, but similar. Where we get that bottom and the market just shoots as the start to the next rally phase, with the correction getting confirmation that it's over. So that's kind of what I'm looking for. Now, to timing wise, it may coincide with either the August monthly expiration or one of the additional August. We have them all the way out to the end of August. And then beginning in September, we should, I believe, start to participate or build on a minor 5th wave up. So getting back to that larger picture, just to kind of go over what my expectations would be, is that we have minor 3, then minor 4. Then we race higher in a minor 5th wave. That completes the intermediate 3rd wave. And then we come down again in an intermediate 4th wave. And I'd be looking for pretty much the same area, all in here, from intermediate wave 4. And then we go up in intermediate wave 5, which would take us again to new all-time highs. So minor wave 5, I would highly say that it will get above the top of minor wave 3. So that basically puts us above 20,700 in the cash market. And we'll, as soon as we get 4 done, we'll be able to put up for wave 5, because we'll connect minor wave 1 over to wave 4, and then we'll get our fibs going back up to what levels we'll be looking for. But definitively, I'd be looking for something above 20,700. Now, bringing it back down, with that in mind, then we come back down in an immediate fourth wave. We go back up in an immediate fifth wave, which would then be looking to go above the completion point of intermediate wave 3, which is still in progress. All right, bringing it back down to that hourly chart, let's discuss these gaps. So what could we have done here? Could this be 1, 2? So we're now counting on a minuet level. Minuet 1, minuet 2, sub-minuet wave 1 of minuet wave 3, sub-minuet wave 2 of minuet wave 3. And what would the expectation be? We drop strongly again. Cash market, a little bit different when you're looking at this chart versus the futures chart, which continued to trade overnight and continued to trade after the close. So, but if we're just basing it on the cash, it really looks like 1, 2, 1, 2. We're going to drop in the 3 of 3, get up in a 4 of 3, 5 of 3 to complete that third wave. Can that happen? Yes, all the way down here. That would just be the completion point for the third wave. We come up in a 4 and we come back down in the fifth, and that's when we get into this area. Right into there. So far, it all looks pretty standard and pretty clean. And the rest is up to the market. And as it's trading, it doesn't always appear very clean, I have to share with you. It has its moments where it's like crazy. But let's fill in that, because remember, we're in the correction now, and that kind of produces a different way that markets tend to trade. So the volatility kind of picks up. Volatility in this case would be that, to me, the speed at which the market can move up or down. So we get these larger, quick blasts up and then just follow through with another down size move. And we got a lot of that on Friday, and we've had a lot of it just in, during this finishing stage of a C wave down. Remember, C wave characteristically are powerful, similar to third waves. So we can make those comparisons. So, but if we're looking at comparing the C wave to the A wave, I will be looking for it to come in a little bit more than 100%. That's where the 1.618 comes in. And that's kind of where I'm looking at, or somewhere in between here. So I think the 100% marker may complete the third wave. And we can get that done at the beginning of next week. So that's kind of how I'm leaving this open, because I'm going to let the market fill in that blank as to what actually it is, because for all I can say, maybe that's one and we're in a 2 and we come back up towards 18,568, maybe even back up to the 20, which is 18,670, and then start to come down in a third. So 2 choices, 1, 2, 1, 2, which kind of just kind of pushes us towards that 3 of 3 type of a move, where we get another gap down or stronger move down. If we still have a little bit left to do in a bounce, we may get that tomorrow when Globex restarts. They're balancing it all out, how they all came out of expiration. Maybe they need to pick up some futures, whatever, get things back to neutral for the actual session. We'll see. What else is influencing the market right now? Well, we've now pretty much gotten most of the big boys have been reported. What we have now, but that's kind of at the end of August, is NVIDIA. So NVIDIA is going to remain in play. And along with AMD, they're just kind of bouncing it around based on any news that comes out about chips. Now, speaking of chips, if is really important right now, I need to include what is going on in Intel. Intel, of course, chip maker, a historic, stronger chip maker, but it has really run into some problems. And on Friday, either it was Thursday or Friday, it might have been Thursday, and we got the follow through on Friday. Their earnings were abysmal, and they announced that there'll be 15,000 layoffs. People will be laid off from Intel in a move to bring the company back to profitability. So they missed, and they missed badly. So I just kind of want to take a look, because not that Intel sits high on the totem pole in terms of, where are they in the pecking order. Within the S&P, it's down like 120, 130 now down the list, but it still carries a little bit of weight. In the NASDAQ, I think it's also downward. Hold on. Let me just go take a look, because I do have my charts open to show that. Intel is number 28 in the NASDAQ, and Intel is let me get all the way down there, is 73 in the S&P. So out of the ranking, it's 73rd in the S&P, and it's 29 in the, or 28th in the NASDAQ. So it has some pull. On Friday, Intel was down 26%, closed down. It went down further. So it was down 7. Now, if I bring this up to my daily chart, you're here like, oh, look at that gap. This was the gap. Here we have the 1st of August. Here we have the 2nd of August. A ginormous gap down. In fact, ended with that low was 2042. It managed to come back up a point to soften as much as it could that blow. Now, what's up with Intel? What happened when we're looking at that? This was December of 2023. The stock was trading above $50. So in basically 8 months, what were they hiding? We saw some of it there, and then this rally back up. What was all that? And then this total collapse. I want to bring it out, and I want to take a look at the weekly chart. These gaps are humongous in terms of the stock. I have to come all the way out to my all data that I have in Intel to get a picture as to like, what's the potential here? If I'm just counting this drop to that high and what could come next and the next leg down, it sailed through 618 coming off. That was at 24.15. It didn't even manage to close back above it. So that level's history. What comes next? 100%. Where this nosedive will be equal to this nosedive. And that brings us down to $7.38. It has traded there before, but it should, and I just say should. Historically, it's finding support about the $13 level. That's 13, that's 12. So 12, 13 is where I believe it could find support. And if it holds, then maybe we get a decent rally out of it, but it would be 1, 2, 3, maybe. So I would assume that off of this level, this is kind of A, B, and we're putting a C wave down. And so it just really could last for a while. Or, is Intel like just in so much trouble and is so lost in terms of how a company functions? I don't know. I mean, I'm not really inside there. So, but Is there a chance that Intel will just be jettisoned from all of the ETFs, the indexes that it sits in? To be determined. So, but there is a definitive problem within Intel, which has been a major player within the chip space for its history. So, and there was all of these rallies, which were really based on their positive move towards chips within AI. That must have failed miserably, obviously, with this dump that it's just done. But just some facts. There are 38 ETFs that have Intel in the top 15 holdings within the ETF. So we're going to see adjustments in all of those. Are they going to get rid of Intel? Are they going to move out of Intel and into something else to balance it out a little bit more? I don't know. But just so that you understand, what can we expect to start to see? So one of the largest is, of course, SMH, which is the semiconductor. That Intel is 4.54% of the move on a daily basis in the SMH. So when the stock goes down 7, it punches a hole in SMH. The SOX is 4%. The XSD, which is another semiconductor, is 3.23%. So are we going to see that the percentage, in other words, the weighting drops significantly enough that it lessens the blow, but has the blow, or has that blow already been all factored in? I bring this up because obviously this is going to have an effect on the S&P, not as strong, but still have an effect on the S&P and also on the NASDAQ. So leaving that out there. Now back to the NASDAQ. Let me go over to the NDX. We've already finished up that and what I basically wanted to say. And I'm going to go back to my hourly chart. So the question, and I think it won't take very long for us to find out, is this going to be 1 and then that's a 2? So 1 of C, or is this 1, 2, 1, 2? Either way, I think we got a little bit more upside to do, and then we're going to drop again. And I think the drop could be hard and fast. To be determined, but that's going to be my short-term outlook here, is that this is not anywhere near over. And we're going to drop deeper into this. And actually 2 weeks now, right? Monday is the 5th. And then we have that week, and then the following week, and that Friday is the 16th. 2 weeks to maybe get to the bottom of this. That would be quick. But at least, we'd be done with it. Right now, we're still dealing with all of this. And add into this, we have a geopolitical situation which could explode, which will have an effect on all of our markets. Now, going over to the future. The future, you can see, fills it all in. So kind of I start to look at it, go like, well, is this 1, 2? And then we've got a 1, 2, and then we got a 3, 4. It's a little bit more difficult. So what I try to do is I bring it down. Let's look at the line chart. We can kind of see 1, 2, 3, 4, 5. Would that just be 1 of C? Or is it 1, 2, 3? Or 1, 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, 1 be the extended wave? Or there's so many different ways I can look at this because we're just starting. All right? Is it 1, 2, 3, 4, and then we're in the 5. 1, 2, 3, 4, 5. So it won't be that severe of a downside move before we're done with either that first wave or the third wave. So we got to pay very close attention here, because if it's going to be severe enough, I'm still looking for it to come down into here before all is said and done. I'm thinking wave 3 brings us down to here. That's quite the drop. 17,600 from 18,500. It's 900 points. Now, we dropped pretty strongly on Friday, right? We're looking at it. 510. What's another 400 to that? It is a 3 of 3 move. So Dow Jones down 600. You know, if the markets are really going to give up the ghost, what could really force this? Iran does decide to attack Israel and pulls the United States into it, because the United States has already determined that they, by treaties between the countries, the United States will defend Israel if Iran attacks Israel. The United States has already declared it will. And from what I understand, they're moving military. So likely the Navy, some other things over towards the Middle East in preparation if and when. If that happens, it starts to become a world war, doesn't it? Iran declares war on Israel. The United States has to pull in and we declare war on whomever. If that pulls Lebanon in, so we got Hezbollah, we've got Hamas, they start to jump in, both being backed. Do we get other countries that come in and in defense of Iran? We have no idea what deals they have signed behind closed doors with other countries, such as Russia, China. Are they going to come in defense? Are they going to send military? Not only just military, like boots on the ground type military, are going to send their defense weapons. We don't know. So that can escalate pretty quickly. And we've already been, been hearing that the Iranian government has already promised that they will, do a little payback. They will respond. So haven't seen yet, but that's sitting out there. And that could really upend any rally attempts, any positives, and just put it all on hold until we get to the bottom of the 4. Okay? So a little bit difficult to put in, to truly define where we are within it. I still believe we're within the first or the third wave. So if we're done with wave 1 and 2 and we're still inside the third, then I think we're getting ready to drop into 3 of 3. That's my opinion, both for the cash and for the futures market. And if that's the case, we might have a little bit of a bounce first, and it actually could get all the way back up towards that high, 18,633, before we nosedive. So it could be a decent rally to begin. I have no idea. We'll see how they all want to start it tomorrow. But I'm not, I'm not very hopeful that we just start rallying off of this point and that we've reached that low. I do not think that we're at that low. We may bounce, and they may do a stronger bounce. Now, this is the other part I want to fill in. Because of how we're falling through put walls, we're falling through volatility triggers. Again, on the cash market basis, we gapped through them. So there really was no other choice for players, for institutions, for traders, that, once we gap through it, they must adjust. So we saw that strength in the selling. Now, having said that, when we get these reversals, they're just as intense, and then suddenly they stop and we get the reversal back. That's been my point all along, is we're breaking these levels, volatility triggers, put walls, call walls, gamma levels, where we have this congestion or this large amount. Now, on the way down, it's likely been created, the gamma level's been created by puts being shorted. So that forms that wall, so to speak, that should be support and push the market back up. When it punches through it, as violently as it does on like gapping lower in the cash, then the market's response has to be adjust. And the adjustment will be, if it's short puts that are holding it there, then understand that as it goes through it, those positions are getting longer, not shorter, longer. So they are picking up a lot of long, what we call delta, and then they have to sell. They're selling into weakness, which is going to aggravate anything going down. But when that particular sell cycle is done and the next are buy orders coming in, well, it's like a vacuum. It'll flip higher and then stop and drop. That really can affect how we trade, particularly day traders. Even if you're a swing trader, you'll see something really kind of moving in the NASDAQ. You could be down $1,000, $1,500, $2,000 a click of a finger, and I'm kid you not. So I urge caution on all of that as we trade through it. Now, so what do we got here? We've got the problem with Intel. Needs to be adjustments need to be made. So I don't think we've seen the end of Intel going down. I think we have the geopolitical situation in the Middle East totally unresolved, hanging by a thread because we have one side promising retaliation for what the other side did. Yet to be seen. Then we just have the continuation of a corrective phase that has been in progress from the July highs. So overall, we're still looking for some downside. Rallies may be intense, but until we start smacking support, I would look at them as just bounces. As intense as they are, I would look for them to reverse and continue to go down. All right, that's going to be it for here. If we're looking at the moving averages on the hourly, you can see what sits up on top. We are lined up to go down. In fact, the 20 is truly cruising lower. It is not gently rolling over. It has rolled and now it's heading lower. It's the 13 that kind of like, okay, we'll go flat right here because we got a little bit of a bounce. 20 still pointing strongly lower. 50 still pointing strongly lower. 200 rolling into that. That's on the hourly. If I look on the daily chart, again, these are all basis the future. On the daily, we had 2 negative bars in a row. And we've got the 200, the daily 200 in the NASDAQ, in the futures market, got slightly penetrated on Friday, managed to close back above, sitting at 18,419. That's support, and it's also a fib level. So we got that. If it gaps through that, take the hint. It's no longer support. So that being said, we have the 20 getting ready to cross the 50. Once it does, it may add to the pressure. We've got the 13 coming down. If it goes fast enough, it's going to break that 200. We're looking for the other two to break the 200. That'll add additional downside pressure should it occur. All right, that's where I'm going to complete it for right now. Next week, in terms of numbers, let me just take a quick peek here for what we got going on. Excuse me. So we have next week, on Monday, we have the S&P final U.S. Services PMI and ISM Services PMI. Now, I think it was that ISM manufacturing PMI that really upset the apple cart on Friday, along with some other things, but I think that was a major one because the selling really began at about 10 a.m. Eastern, and it just kind of dropped. So Tuesday, we have the U.S. trade deficit. Wednesday, consumer credit. Thursday, initial jobless claims, wholesale inventories, and then Friday, nothing. So light week, but still what's coming out could upset the old apple cart and just keep driving it lower. And that's going to be it for today. The next Elliott Wave Daily update will be on Monday, August the 5th.